Hello there, my friends. Chris Marcus here with you for Arcadia Economics Weekly Market Wrap-Up on Friday, October 19th. Interesting week in the markets. A lot of commentary from President Trump about the Federal Reserve, amongst other things, which we will dig into. Although first, let us take a quick look at this week's markets level. We are getting close to the end of trading on Friday here. Dow Jones at 25,468. S&P 500 2771 and the Nasdaq at 7457. In Europe, we have the DAX at 11,553. Asian markets, Nikkei at 22,532 and Shanghai at 2550. Again, a lot of recent stories. We had some commentary out of China last night, whereupon weaker than expected GDP numbers, I believe it was. Some announcement, although the key takeaway was that Chinese officials were trying to soothe investors. And, maybe this isn't factual or numerical, but I find whenever you hear government officials and central bankers trying to tell investors that everything is okay, often that is not the case. So along with that, there have been lots of reports about credit issues in China, and seems like they've in some ways taken after the lead here in the United States of extending a lot of credit. So certainly keep an eye on China and see how things go there. Quick look over at the U.S. 10-year Treasury, creeping back up there, 3.19% today. You can see it got over 3.2%. Again, let's take a look at the one-year chart here to put it in perspective. You can see really since about a year ago, it's been a steady climb. Rates were at 2.51%, now over 3%. And interesting note here on CNBC, futures now, 10-year yields could spike to 4.5% and send stocks plunging into a correction. Given that a lot of the foreign lenders are walking away from the dollar, walking away from the treasury market, loading up on gold. At the same time, the Fed is raising interest rates and supposedly increasing the speed of its tapering away from its quantitative easing burden. I wouldn't be surprised at all to see yields spike. You still have this idea that the U.S. Treasury is somehow the safe haven, which, without going off to a rant on that one today, I don't know how I could more disagree with that, but certainly if people are, some of the investors around the globe are watching this video and some of the other things I've mentioned here that point out the great flaws in the US dollar and treasury system, sure has been set up so that at some point people walk away in droves. That has not happened yet, but certainly the pieces are in place and we'll keep an eye on it. Quick look at gold and silver. Gold up to 1227, silver at 1467, so climbed higher in the recent week or two. Bitcoin 6473, Litecoin at 5328, so the cryptos still sitting in that same range, although it was interesting, new Cliff High video out yesterday where he talked more about some of the things that have happened in the cryptos, some of the manipulation that explains the pricing. And if you check out Cliff High's channel, good video up there that I highly recommend. But now back to President Trump. Here he was again complaining about rising interest rates, calling the Fed my biggest threat. They're raising rates too fast, blah, blah, blah. You look at the latest inflation numbers, they're very low. I don't know what inflation numbers he's been looking at. Even the CPI, as flawed as that may be, showed, I think it was like 2.7 or 2.8% more than one recent month. And of course, if you want some actual real inflation data, you could look at John Williams' shadow stat, who says that it's running closer to 10%. So I would disagree with the president that it's pretty low. Although perhaps the real takeaway, again, Trump campaigned on auditing the Fed, mentioned a gold standard, talked about the stock market being a bubble. Yet, like many other politicians, once it comes time to raise interest rates, all of a sudden, no one wants to hear it. Keep in mind, Fed funds target rate at 2% now, and everyone's throwing papers around the Oval Office because they don't want it going up faster. But to put that in perspective, after Greenspan, the former Fed chairman, lowered interest rates to 1% for a year back in 2003, when he started raising rates, I believe the last hike took that short-term rate up to 5.25% in the summer of 2006, before the subprime bubble started imploding and rates were brought back down to zero. Again, when Paul Volcker tried to beat inflation in the 1980s, he raised that rate up to 20%. So put in perspective, here we're talking about Fed's up at 2% and they're saying rates are going up too fast. On one hand, yes, as rates continue to go up, as I've said many times on this channel and elsewhere, the more rates go up, the more likely the bubbles in the stock, bond, and real estate market are to pop, and the sooner that is to happen. Now, the downside is that the other alternative is just keep rates at zero and print the currency into oblivion. And what I think is worth pointing out that you may not hear in many places, but I feel is very relevant, is that it's kind of like you're arguing about what should be done after the accident has already occurred. The way to avoid this is not to lower interest rates and print insane amounts of money, but let the market function. But once you do that, then you create this situation where the Fed is backed into a corner. And neither of the options for the Fed are particularly great, although I continue to believe that the options for people trying to protect against the Fed that come in the form of gold and silver and select cryptos will come in quite handy in due time, and we will see how soon that time is. And one last note on that, I actually had a great interview with Dave Janda on the Stock Pulse Network this week, which I will get a link to below. But really, he walked through a lot of what's happening behind the scenes, which is, of course, different from what we're presented with in public. So if you want to know perhaps more about some of the things that are building and maybe coming, check out that link below. And in response to Trump, Fed minutes point to continued gradual rate increases. So far, the Fed going to continue raising rates, which again, in some ways could be labeled responsible, although a little bit too late. And we'll see how that battle plays out. Last Trump story for today. Try not to overwhelm you, but this one was just made me giggle, so we'll share it. Trump says each cabinet secretary should slash 5% of their budgets after he pledges to cut spending, which, okay, that makes sense. We'll cut a couple bucks here and there. We got a big deficit going. Of course, fortunately, what is mentioned is the proposal comes days after the Trump administration announced a $779 billion budget deficit for fiscal 2018, a 6-year high and a 17% jump from the previous fiscal year. So Trump is going to ask for a 5% cut from every secretary today, which I don't know, can I make markets on YouTube without violating some ridiculous SEC rule? If anyone wants to bet on that happening, that he actually gets 5% from every secretary, let alone from a single secretary, and yet we're talking about 5%, yet the deficit has jumped 17%. So even in the remote case that did occur, you know, it's still, the deficit's getting bigger. And then here, senior advisor Kellyanne Conway says he's asking him to cut the fraud, the waste, the abuse, cut the fat, not the essentials. Wouldn't that mean cutting everything? Who knows? But in either case, that's why I go to gold and silver and things like Litecoin. Again, not legal financial advice, but that's what, if anyone wants to hit up that donation button on arcadiaeconomics.com, that's what I would be buying with that. So in either case, fascinating times out there. Hope this week finds you well. If a lot of the stuff seems like it's silly and does not add up, then again, I'd really recommend you checking out that Dave Janta interview. He put some things in great perspective that, in my own personal opinion, I don't think you will find elsewhere. And as always, this video is sponsored by Miles Franklin, where you can buy your gold and silver. by visiting milesfranklin.com or calling 1-800-822-8080. So with that said, go out there, have a great weekend. Hit the subscribe button before you do, and I will see you again next week.